Hey YouTube, welcome back to the channel. Thanks again for tuning in to another video. If you haven't already, make sure you subscribe to the channel. I would really appreciate it. And make sure you leave a like on this video if you like what you hear today. I think everyone knows it's been a wild year for crypto, and it's really been a wild 2 weeks for the crypto space. We saw another crypto craze during the pandemic that far exceeded even what we saw back in 2017 during the first spike with cryptocurrency. Bitcoin's price even got as high as $64,000, which is just absolutely wild. We also saw the rise and crash of NFTs, with some NFTs selling for multi-millions of dollars. Everyone seemed to lose their minds with all things related to crypto and all things related to NFTs for the last little bit. Well, over the last couple weeks, we've also had the whole situation with FTX take place. And if you haven't heard what's happened already, let's just break it down very quickly. Prior to the recent events that we are about to talk about, FTX used to be the second largest crypto exchange, where customers could purchase and trade various cryptocurrencies. You can do similar things on Binance, Crypto.com, Robinhood, etc. Well, the fall of FTX all started when crypto hedge fund Alameda Research was found to be holding a significant portion of FTX's own cryptocurrency, FTT. Now, the problem? Alameda Research is owned by the same CEO as FTX, and he goes by the name of Sam Bankman-Fried. This is a huge problem because, like a lot of other assets, the value of cryptocurrency is solely based on the supply and the demand for that particular cryptocurrency. Essentially, Sam Bankman-Fried was using his own hedge fund, Alameda Research, to inflate and prop up the value of FTT, which he also owned and controlled. Essentially, FTX and FTT were built on a house of cards that were due to come tumbling down at any minute. Upon discovering the mingling of funds between FTX and Alameda Research, Changpeng Zhao, CEO of rival company Binance, tweeted that Binance would be selling their significant portion of FTT. This announcement absolutely crashed the value of FTT. And shortly after, Binance would agree to acquire FTX, but that deal would ultimately fall through. This has caused individuals who own cryptocurrency through FTX to create essentially what is known as a bank run, where people who invested their money in FTX wanted to pull their money out. This further crashed the value of FTX and in turn also crashed the value of FTT. And FTX would later go on to file for bankruptcy. But this isn't the only bad thing that's happened in the world of crypto. Over the last year, the price of Bitcoin and Ethereum has decreased by 75% and 72% respectively. The value of NFTs has also crashed as people have decided to look into how much value these digital assets actually hold. I think people started to realize that digital pictures probably weren't worth millions and millions of dollars. And it seems as though that NFT fad is finally dying down. And the decline in crypto likely isn't going to end there, with some publications and analysts predicting that Ethereum could drop below $1,000. To put it simply, crypto has had an absolutely rough year, and it's shown us exactly why investors should be very skeptical when investing their money in crypto or in other emerging investment opportunities. So now that I've painted the picture on what's going on with crypto, how exactly do I feel about cryptocurrency and how does it fit in your investing portfolio? So let's break it down into reasons why I am against it and reasons why I am for it. And because people just love bad press and bad news, let's start with the reasons I'm against it. With reason number one being crypto is extremely volatile. I think the whole video leading up to this point has already explained this, but crypto fluctuates up and down so much. And really, it could crash at any moment. The entire space is still pretty much unregulated as world governments are still trying to figure out what to do with this entire industry. Many investors who had majority of their net worth tied up in crypto have seen their net worths absolutely plummet. And I would hate to see that happen to myself or really anybody. All right, so reason number two, there's actually nothing really backing cryptocurrency. Cryptocurrency only has value when a collective group of people actually decide that it has value. The reason Bitcoin has increased so much in price is because of the large number of people who've agreed that it holds value and who have agreed that they want some of it. This has shot up demand and has also shot up the price. Now, this is really how any product works in a capitalist environment, but the value of Bitcoin and the positive impact it could have on the world are still very much undecided. Something could still come out in the market within the next 5 years that completely wipes out every cryptocurrency that you can currently buy. And once the demand for a particular cryptocurrency runs out, like Bitcoin, the value drops all the way to zero. So you might be asking, how does that differ from regular money like US dollars? And it's a good point. Money as a concept only works because there's a collective group of individuals who agree that it has value. But the value of the dollar has remained relatively stable due to fiscal and monetary policy. And it also helps that the US dollar is backed by our federal government, who also regulates our banks to make sure that something like what happened with FTX doesn't happen and doesn't impact as many people. There are a number of controls in place that help regulate fiat or regular currency as opposed to cryptocurrency. And now let's get to the last reason that I'm against cryptocurrency. Cryptocurrency requires a large amount of computing power to operate, and I'm not sure we have the infrastructure required to handle it just yet. Now, let me start with a disclaimer. I am by no means a technical expert when it comes to cryptocurrency. There are so many people and developers who know a lot more when it comes to how these systems are built and the power it takes to run them. But here's a summary I've come up with that may be able to provide you with a basic understanding. So in order to be created or mined, cryptocurrencies have computers run a complex set of calculations. And as those computers run those calculations, that cryptocurrency is essentially mined or created and brought into the market. And for most cryptocurrencies, the more you mine a particular currency, the harder it is to mine any future currency. So for example, let's say you were mining 1 Bitcoin back in 2012. Well, it took much less computing power to mine that Bitcoin back then than it would take you to mine 1 whole Bitcoin today. I bet 10 years ago, you could mine 1 Bitcoin pretty quickly on a regular home computer. Today, that would take a very sophisticated set of very powerful computers to be able to do that even over a long span of time. And this computational power isn't only needed for mining or creating cryptocurrency, it's also used to handle a lot of transactions that take place in cryptocurrencies. So even once a particular cryptocurrency is mined, it still takes a significant amount of computational power to handle transactions with that crypto. So to sum it up, the amount of computational power needed to support these cryptocurrencies has proved to be very expensive, and we don't quite have the infrastructure to support it on a larger scale. And on top of that, there's also the argument about sustainability and the environment. Computational output obviously requires power and energy, which at the larger scale that crypto is demanding could have very negative impacts on our current environment. And this seems a little counterintuitive to me, right? Obviously, one of the perks with taking things digital would hopefully be that it's going to reduce the physical footprint that it has on our world, but crypto's been set up in a way that there's still a very real physical effect from mining and transacting with these cryptocurrencies. So anyway, that covers the negative. So now let's move over to the positive. And no, I'm not all doom and gloom on cryptocurrency. I have a very small percentage of my portfolio in cryptocurrency. I definitely believe that there's a future for it, and I believe that there is some upside to investing in it. So I just touched on this, but reason number 1, crypto has huge upside potential. Even after the most recent crash, Bitcoin is still up almost double from where it was 3 years ago from today. The industry is still so early in its life that the argument can be made that this is a great time to get in. And I am very positive that the use case for crypto is here to stay. I just don't know exactly what that looks like and what cryptocurrencies are going to be popular in the future. Which brings us to point number 2. I believe in cryptocurrency as a concept. As our world moves digital, maybe towards the metaverse, it makes sense that we would have a digital currency that's decentralized and also has less regulation. I can see how crypto and NFTs would play a key role in emerging technologies right now. I believe that cryptocurrencies will always be around in some form because I think the idea and technology behind blockchain and running a currency through it is very fascinating and definitely provides value. So to sum up those 2 positives, you can make a ton of money off of it potentially, and I do think it's going to stick around in some form for the long term. But remember, crypto is something you have to be very careful with. No one knows what the world of crypto is going to look like even a few years from now. And if people say they do, they're lying. No one has any idea what's going to happen. Bitcoin could fully crash to zero and be replaced by something we don't even know about yet. So should you invest in crypto? Well, ultimately that decision is up to you and your risk tolerance and your current financial situation. But it might make sense to invest a very small portion of your portfolio into crypto so that you can see some of the potential upside from it. Right now, crypto makes up a little less than 5% of my entire portfolio, with my crypto investment pretty much being split down the middle between Bitcoin and Ethereum. I think those are the two main players in the crypto game right now, and those are the ones I believe in the most. And that way, if there's another boom, I'm gonna see some of the upside from that without taking a huge risk by having a lot of my portfolio locked up in crypto. And if crypto tanks to zero, it makes up such a small percentage of my portfolio that I won't really miss it too much, although I do hate losing money. Ultimately, like I said, the decision is up to you, but just be careful with it. And that is gonna wrap up this discussion and analysis on crypto, where it's at and where I think it's going. If you like this video, please leave a thumbs up on it and please comment down below, where do you think crypto's headed? What are your thoughts on having it a part of your investment portfolio? I'm definitely curious to hear. And as always, thank you for watching and make sure you tune in for the next video as well.